And we are live, live, live. Good morning to you, Vernon. Good morning to everybody who's with us today. It's a happy Thursday. As we have come to say to it on Money FM, Baby Friday, or Friday's younger brother that at least comes to tell you the other one is on the way. So when that younger brother says, "This one is home. This one is home." So Thursday is Friday's younger brother. So welcome, 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 Vernon. How's your
Absolutely.
Friday going? How's your early Friday or Thursday, Friday to be or Thursday going?
Early Friday for me looks, you know, of late, I think I've been, stuck somewhere where I feel so much energy to do something and birth or gives birth to something, but then I'm stuck somewhere. So I'm still figuring out before this energy drains out. You know what I mean? But ultimately, it's a lovely way. It's a lovely Thursday.
The word is called procrastination, Vernon. We all suffer with it. We all suffer with it. It means you're just not doing what you're supposed to do. So today, Vernon, we're going to talk about four things. Okay, four things are on the lineup today, and we're going to try and run through them as quickly as possible. Market roundup as usual. Then we are going to swing. We're going to switch into a talk conversation about something called the 4-day work week. Okay, and then we're going to talk about entrepreneurship succession, the 5 components, and the five components and the five principles to entrepreneurship succession, in other words, family business succession, while also looking at one of the most important conversations or the important qualities a person should be looking at, Vernon. What are the qualities of a good number two? Getting a good second in command for your business, because that's usually the person who's going to get you. I've got 10 qualities given to us by Patrick but David about how to pick the best number two. You're really going to want to stick in for that one at the end. So now let's get into the market roundup today. Obviously, still same old. Vernon, Kwacha has been moving down the negative slide. 111 days of Kwacha loss. We've actually seen it down by it's down 12.29%. The dollar is up 12.29% on the year to date, down 0.55% yesterday, one of the worst losses. So we're even seeing accelerations now happening in the loss of the kwacha. So it is the dollar is in a strong bull market, 12.92% year to date. But you always have to remember, people, one good debt deal and whoop, there are all your gains gone, vanished. Vamoose, never to be seen again. The rand was down 0.74% yesterday. Year to date, it's up 5.37%. That is a little bit of inflationary pressure, by the way. But on the month, it's up 3.44%. So it's actually been a strong rand month. So I should expect that the cost of things coming in from South Africa should be up by about 3% coming in at least this month. So, and remember that South Africa makes up 1/3 of our imports. We are seeing that it is only 1 day losing streak for the rand, and you do have a strong bull market happening there. Let's go into the bond market. We had a serious sell-off yesterday in GRZ bonds on the secondary market. The first one we've had after 52 days. There was a sell-off that pushed interest rates up. We saw the GRZ bond index drop by 1.33% yesterday, bringing year-to-date gains down to 4.49%. As remember, it was sitting somewhere about 5.2. We should try and see that rebound very soon, but we snapped a 52-day winning streak on the GRZ 72, the GRZ bond index. Now, on the US dollar side, it's still a losing streak. And we are seeing that we're down 7.47% year to date on in US dollars in terms of bonds. Those are offshore holders and what they're holding. But we did see that the interest rates jumped up yesterday by 0.6%, meaning that somebody, as I said, did dump off quite a number of bonds and sell them off, pushing interest rates up on the composite bond index. Now, as for the commodity market, yesterday we did pick up that copper was down 2.8%. And oil dropped 3.77%, down to the lowest that it's been throughout even the year. This is the first time we've seen oil this low. What is actually causing the problems? Well, Vernon, there is a worry about the global banking sector. And it's not what you think. Everybody's talking about Silicon Valley Bank. Actually, the most shocking one is actually Credit Suisse in Switzerland, which is the one that's mainly concerning, which has actually got some, it's been flagged for some vulnerabilities in its financials and its reporting. And you've seen the Credit Suisse stock actually dropping. So before everyone pays attention to what's hot in the news, there's an even bigger story that's actually affecting the concerns of the banking sector when it comes to Credit Suisse. So we have to be careful there because that's what's actually causing a bit of losses. Now, on the good side, on the upside, what it is causing is that oil prices might only move up by 2%. I've given my mid-month review of what my expectations of oil prices are, and expecting the oil price to be 29.08, only up 56 in Gwe, or 1.97%, as opposed to the 3 to 4% that we've been seeing moving, mainly because of a 1.44% decline in the US dollar. In Brent crude, and a 3.7% raise in the US dollar over the last month. In terms of the monthly movements, so I think that's what's actually going to be driving your pump price there. So all of you are basically going to have to start praying for a banking industry collapse. Now, ironically, what's actually happening during this period where you are seeing the banking industry having some shaky problems because Silicon Valley Bank and Credit Suisse reporting on the same day are now giving broad fears of a banking collapse. You're seeing gold is actually doing well. So whenever you're seeing there's a risk of a financial meltdown, you see gold do well. So gold is starting to rally and Bitcoin is starting to rally, mainly because these are the two hedges for financial meltdowns. Okay, they're not inflation hedges. They are geopolitical or geoeconomic instabilities or financial system meltdowns. That's what they come in to try and fix. So you're actually seeing that gold actually pumped up yesterday while the other two commodities, and that is a sign that we are in the middle of a sticky situation and a bit of a problem. Now, is there going to be a global mess in terms of that? That's a different story. But we haven't gotten down to all of that. Now, looking at other information also on the market. So let me just get down to gold, how much gold actually moved yesterday. We did see gold also move as we saw copper and oil move down 2 to 3%. Gold moved up 1% in dollars and is up 5.22%, 5.25%. That means if you've been holding gold in your portfolio, your gold is actually up 18.84% year to date, while your dollars are only up 2.2. So you're seeing this divergence now happening because of concerns to do with the banking system around the world. Seeing failures, as I said, obviously of SBV and all these crypto-friendly banks, but simultaneously also seeing Credit Suisse having reporting problems. Now remember, Credit Suisse is a very strong part of the European banking industry. So it actually speaks to that. Now, we did see, unfortunately, Ethereum was down 2.1% yesterday, while Bitcoin was up 0.1% yesterday. And Bitcoin is up 64.76% year to date, while Ethereum is up 55.18%. Now, remember, these are heavily volatile assets. The stock market actually also felt a bump up yesterday, mainly due to a two-day rally in Standard Chartered shares, which were up 10% the day before and up 14% yesterday, basically on the results. And it's also time for me, Vernon, to now start hitting into some of the results. But before that, let's finish off with some of the four horsemen that we're looking at. So now, on inflation, we saw oil is tumbling on fears of a banking crisis, while we saw Saudi Arabian inflation go deflationary for the first time in 14 months. Unfortunately, they're still wrestling with inflation in Africa. Namibia and Botswana are still battling elevated inflation levels, and Nigeria's inflation has gone to new highs, especially driven by US and by food inflation. However, on the good side, on the flip side, US PPIs, producer price indices, are seeing declines across the board. So you actually are seeing that supply chain prices in the US are starting to come down. German bond yields have kept rising, and Credit Suisse, this is the big news in the banking sector. Credit Suisse has sparked serious fears in the banking sector as the stock tumbled following disclosures of weakness in financial reporting that renewed investor concerns and of a full-blown banking crisis that is actually global. So Credit Suisse is your real test now of what is happening, not Silicon Valley Bank. That's an idiosyncratic situation. But Credit Suisse is the real threat. Now, the good thing for Zambia is we don't have that many foreign investors anyway in our bond market. They fled already. We've got just a bit of our bond market, less than 20%. The biggest holders of bonds in Zambia are pension funds and banks. So we're not really looking at the offshore community yet. But that just means this may slow them down in re-entering our market and therefore keep our domestic bonds elevated for a longer period of time. People pile in. That's what I keep saying. EU industrial production rebounds after 4 consecutive months of deceleration, even 1 month of decline. Housing sector in Canada continues to accelerate, while unfortunately the New York Manufacturing Index shows that manufacturing in the US is in a deep decline. That's also got to stop. That also goes down with PPIs, and also you saw that the Indian trade deficit shrunk due to faster exports. So we are getting mixed reads across various parts of the economic sector. Now, finally, we're also going to be looking at what was the final data that came out yesterday. We did see that core machinery orders from Japan were up 9.5%. That's a manufacturing recovery. While you're also looking at core machinery orders for the month, also up 4.5%. Exports in Japan grew by 6.5%, which is lower than expected, but higher than the previous month. While we also saw imports grow by 8.3%, slower than the previous month. So we're actually seeing slowdowns in that. Trade balance in Japan shrunk to at least faster. It was $3 trillion the previous month. 3 trillion yen the previous month. Now it's 800 billion yen in this previous month. In this month now, and we saw housing prices, which is not good for copper, in China come down. Data we should be looking at today. As we're looking at the calendar data that is set for coming out on this Thursday, which is the 16th. We are looking for CPIs coming out of Italy, CPIs coming out of, bond data coming out of Spain to see how interest rates are doing throughout Europe, building permits in the housing industry in America with the joblessness claims coming out of the US. And most importantly, we're waiting for the rate decision coming out of Europe. The expectation is that the central bank is going to raise interest rates by 25 basis points and not 50. That's the expectations, but there is the expectation that that later on they will do a 50 basis point hike. So that's the expectation of the rate, with a bit of a bond auction later coming out of the USA. So that is all our data reads and feeds coming out of the market. Now, in terms of main news yesterday, we have got one question here coming from Jeby's period, just to also line up with what we're talking about before we sink into a new topic. He says, "Good morning. Is there any effect or exposure from SBV, Signature Bank, and Credit Suisse on Africa's banks and government bonds, and Moody's ratings to negative to negative? How bad is it on the dollar for America?" Okay, so Jimmy's, when it comes to SBV and Signature Bank, no, there's no real blowback to Africa. Credit Suisse, yes, that might have some serious blowback to Africa, not because you'll see money leaving. I don't see that happening for Zambia because our bond holders have already been leaving due to the default status. So a lot of people have already signed off as Africa as persona non grata in the bond market because many African nations are already in default. Whether it's Ghana, whether it's Egypt, whether it's Zambia, there's so many African countries who are in serious issues when it comes to our debt, especially brought on by the pandemic. So a lot of the offshore bondholders had exited African bond markets and had left and gone back to their developed market bond markets because also they're getting good interest rates there. Now, the probability they're going to return back to juice up, to drop interest rates anytime soon might actually be held back. That, I think, is going to be the real impact, especially of Credit Suisse. So there'll probably be an impact in the fact that whatever's happening in Credit Suisse, specifically them, and also what contagion effect that may have into the rest of the European banking sector, may slow down the European banking sector coming back into Africa to buy GRZ bonds and any other securities. So that's the effect I think that should have. And therefore, my signal to many people is still, that's a signal. While interest rates are elevated and we're keeping these investors at bay, stockpile your bonds, especially your 3 to 5 year ones. Get those 18% return on investment as inflation maybe starts to calm down a little bit. Before these guys come in to push down interest rates, you have a bulky part of your portfolio that's giving you quite high rates and some good income during that period. That's my advice to as many people as possible playing this market. Now, Vernon, there is two pieces of results that I want to go through from yesterday, and that is Standard Chartered and ShopRite. ShopRite Incorporated did have its results, and I'm going to give you the results in Kwacha. Specifically, they did read their results yesterday in dollars, and I'm going to give it to you in kwacha. We seem to be going in and out with you, my brother, but the show will go on. We did see that revenue for ShopRite, as for the 6 months, and this is ShopRite reporting for the 6 months, ShopRite Holdings income did go up by 7.3%. They are battling with inflation pressure on their products. They did actually report that they saw 14% more people coming through ShopRite stores around Africa. Now remember, the ShopRite stock is not ShopRite Zambia, it's ShopRite it's ShopRite Africa. So it's not just Zambia. Remember, 80% of ShopRite's revenue comes from ShopRite South Africa. The only about 10% really comes. They get about $9 billion. That comes actually from ShopRite, the rest of Africa. Now, in terms of the growth of revenue, they saw 7.3% growth of revenue, 4% in gross, 8% growth in net income. So the net income did grow by 8.7%, and you did see the margins, especially on net, did drop a little bit, unfortunately. The margins did actually shift downwards a little bit. Now, we do see that in terms of their earnings per share, the EPS in kwacha. Now, I'm rating ShopRite in kwacha. Okay, I'm looking at ShopRite's data in kwacha because if you look at the earnings per share, remember that ShopRite stocks are 64 kwacha per share. The price to earnings ratio did actually come down. So in other words, you've got a fair priced stock in ShopRite, very well fair priced with a PE ratio of only 4.85%. Remember, I say the price of the stock versus the earnings per share of the stock should be a ratio of 7-1 or less. Okay, 6.5 actually is the good number, but 7-1 or less, and seeing it at 4.8 means that it's a fair value stock. Now, the good thing I think for me for a ShopRite stock is this: ShopRite actually has a dividend yield of 8.5%, and it's a consistent payer of dividends. That's the main thing that we are looking at ShopRite as the ShopRite Holdings as a stock. But we've obviously had historic problems with the transmitting of dividends to the individual members. But we do have ShopRite here. With about 64. Now, it is cheaper to buy ShopRite shares in Zambia. So I always wonder why the guys abroad don't come and play here. But then again, they don't want to start losing money on currency. That may be one part of the issues here. They don't want to take the currency risk to do with Zambia. So we did see ShopRite today. Dividend yield currently sitting at about 8.58%. We did see that cash holdings did grow by 45%. Operational cash flow did grow by 181%. And capex spending, that's the most important thing you want to start looking at when it comes to stocks, is what is their capital expenditure spending? And I'm going to be looking at it also from a lot of our listed companies. We did see capex spending from ShopRite Global also go up as well. So in other words, they're looking at expanding. Now, in terms of their balance sheet strength, we still do see a very strong balance sheet of current assets to current liabilities, still at about a 1.26 times, and debt to current assets still way below 1. That is a very strong balance sheet as a company. Strong cash position, strong balance sheet. Now, will they have growth prospects? Remember that they are at the mercy of the global supply chain and the expense of it, and also fuel prices. And remember that ShopRite is mainly driven by South Africa, so they're really trying to battle load shedding, because South Africa's real battle for them is load shedding, where they're trying to keep the stores open constantly. So if you are an investor in ShopRite, you are at least seeing this as a dividend play. Share price doesn't really move in capital. The only problem with ShopRite is liquidity of the stock and availability of trying to buy that stock. That is a nightmare for the average Zambian. Now, finally moving into the other stock that did report recently, which we are trying to get its data for, and that is Standard Chartered. Standard Chartered is the second of the billion kwacha banks, and we can finally start doing our comparison. Standard Chartered income declined by 9.64%, while Zanaco income was up 11.1%. So these are the two banks worth a billion kwacha or more on the stock market, and we have been seeing a rally on Standard Chartered. Now, when you're looking at net income for Zanaco did rise 17.2%, but you saw a 30% decline in Standard Chartered. So if you're looking at income statement performance, we have seen that Standard Chartered has had a rough week on their hands. Has had a rough month on their hands, while Zanaco seems to be on the rise, up 17% on net income, while Standard Chartered is down 30.88% on net income, mainly due to the downside of their bond portfolio, or the returns on their bond portfolio. That didn't do too well. Obviously, the equity positions of Zanaco is up 30%, while the equity position of Standard Chartered is down 16%. And therefore, market cap versus last year, Zanaco is up 56.57%, where it was while Standard Chartered was down 25, but it has recovered since. So Standard Chartered is actually quite flat from where it was last year. It's exactly the share price is exactly where it was. You're looking also at dividends per share and the EPS. EPS obviously it represents the profit, but my outlook here is the PE ratio. PE ratio of Zanaco is at 3 versus where it was last year at 1.98. So in other words, it's still fair value, but it's got quite a high PE ratio versus Standard Chartered, which is still relatively underpriced in terms of its price to earnings ratio. So as a stock, this is why people are still going back into it. It's still relatively underpriced with a PE ratio. It's still relatively underpriced, but it still has a PE ratio of 3.4. So Zanaco, sorry, I mixed those two up. Zanaco has a PE ratio of 1.92. Standard Chartered has a PE ratio of 3.4. Still, both of them are fair priced as banks in terms of listed assets, but which one has the better growth prospects? Now, in terms of cash growth, you did see Zanaco grow its cash by 72%, and while Standard Chartered's cash position declined by 25.62%. So already we're seeing that the winner of this battle still, whether it's balance sheet, whether it's income statement, Zanaco is cleaning the clock, unfortunately, of Standard Chartered when you're comparing. Operational cash flow for Zanaco was up 225%, while Standard Chartered's cash flow is down in the negative, actually going down horribly. Its operational cash flow was down, I think, 4,000%. So they're bleeding cash at the moment as a bank. They're bleeding cash at the moment as a bank. While simultaneously, we did see now in terms of government bond securities, we did see Zanaco's GovSec securities portfolio was up 65.5%. Cash, obviously, in Zanaco has gone up 72, but has gone up by 72 cash and total assets, while Standard Chartered has lost their cash position by 26.57%. Now, government securities portfolio in Zanaco was up 65.5% to 12.8 billion, making up quite a large chunk of their portfolio. In fact, Zanaco has more government securities than it has loans at the moment, while it was the other way around. Zanaco last year had 9 billion kwacha in loans, 7 billion kwacha in government securities. They now have more government securities. In other words, they've loaned more money to the government than they have to the private sector. While Standard Chartered currently has got a loan portfolio where they're sitting on about 2 billion kwacha, 2.8 billion kwacha of government securities with 1.6 billion kwacha of loans. So that's where some of the problems are sitting right now. Now, in terms of customer deposit, the only good news that did come in for Standard Chartered's balance sheet is they did see customer deposits up by 21.35%. And they did also have good transaction revenue. That was maybe what did actually help them. But you see that 21% growth in their customer deposits, unfortunately, is then dwarfed by Zanaco's 53% growth in customer deposits. So customer deposits in terms of Zanaco, unfortunately, they've also won in that area. Now, if you're looking at percentage, now the only area in terms of their loan book, in terms of their actual loan book, Standard Chartered is still 63% heavily on the government securities. Now, that's not the majority of their assets. In assets, they're holding more cash than anything. They're still holding the majority of their assets in cash and cash-like. Because remember, I said they've got about 4 billion kwacha worth of cash with only about 3 billion kwacha, then about 3-4 billion kwacha worth of loan book. But if you're looking at Zanaco is now holding 51% of its asset portfolio sitting in GSEC, while Standard Chartered dropped it by 2%. Zanaco raised it by 6.8%. So Zanaco's gone a bit too aggressive on government securities. Now, in terms of cash to deposit, Zanaco sitting at about 15.97%, while Standard Chartered has a stronger cash position of 30.84%. So this is where things go wrong a little bit. Okay, so Zanaco, yes, has got more of its capital deployed. In other words, more of the money is actually being loaned out, while Standard Chartered is holding a thick cash position, but at least they're down by about 20%. So they've got 30% of their total of their deposits being held in as cash. In terms of the ratio of deposits, 43% of deposits have basically been deployed to government securities, and 40% of Zanaco's deposits, 15% of Zanaco's deposits are basically sitting as cash. 43% effectively almost are looking as deposits, as GRZ bonds, and the other 40% has basically been issued out as loans. While Standard Chartered is 30% of it is in cash, while 21% is sitting in the GRZ bonds and 15% in the loan book. Now, in terms of their asset allocation, As we said, 16% of Zanaco's portfolio sitting in cash, 43% sitting in GRZ securities, and 40% sitting in loans. This is different from the previous year, where Zanaco was sitting on 13% cash, 38% GSEC, and 47% loans. You can see that GSEC is leading, while you're looking at Standard Chartered, which is sitting at 47% cash, 33% GSEC, and 19% loans. And the previous year, they had 53% cash. So they are trying to roll down some of their cash positions. That is partly what they're trying to do. And those are some of your earnings reports. So we have seen earnings come in from Standard Chartered, Zanaco, ShopRite, Standard Chartered, Zanaco, ShopRite, Zambia Breweries, Zambia Reinsurance, Puma Energy, Copperbelt Energy Corporation, Bata Company, Chilanga Cement, and Airtel. So we have actually gotten quite a number, and we're going to give you the midweek review. I will be giving you my mid reporting season review as to where we are looking. And there's quite a lot of mixed results. You had positive results coming out of Airtel, negative results coming from Chilanga, positive results from Bata, positive results from CEC, positive results from Puma, negative results, slightly negative results coming from Zambia Breweries, positive results coming from Zambia Reinsurance, positive results from Zanaco, negative results from Standard Chartered. We have the majority of listed companies giving you positive earnings results and positive outlooks that we're looking at. Now, I'm just going to go back to our banking sector of our two main banks and our competitors here. One of the main things that we're looking at also is who is winning in the battle of 3D. Now, I always say that the financial services world is moving in a way that things are going to be digitized, decentralized, democratized. And whenever we're looking at the product offerings, the first thing we're looking at is digitization. Obviously, Standard Chartered has rolled out its total digitization push. So in other words, it is an app-based bank, while Zanaco also still has been pushing for out of the branch. So digitization, Zanaco's ahead, but they're both now offering full digital offerings, and they're trying to make sure that they meet the customer's need. Decentralization, Zanaco is still way ahead on decentralization because they're the ones who've been using agents, and they've been using a lot of service providers and connections. Standard Chartered did launch its DSA agents network last year, but now how that's going to now pan out, they're still trying to grow that. So I think there's an option to see how that'll pan out in terms of their growth, but it's not really reflecting yet in their numbers. And democratization is looking at increased access to products and increased choice for consumers. Now, not much in the banking sector is giving the consumers increased power and increased choice yet, because obviously those are regulatory issues. Yet we haven't yet seen the support of that, but I'm sure a lot more of these banks are trying to help give support work to village banks and trying to see if they can offer village banking products. Obviously, Zanaco does have a leading village banking product, but I think they're trying to look at what more they can do in terms of democratization of loans, because village banking is the conversation about democratization of finance, and we're trying to make sure that the banking sector becomes the backbone of democratizing the village banking sector. Now, so you can see that they're both in the same spaces. It's just that Zanaco is ahead of the race, and they've got more. They're harder to compete with in this area. So we're waiting to see whether Standard Chartered switch to a mainly digital strategy will actually pull out. Now, obviously, I think they're just trying to look at where to go next as a bank, and we'll be obviously waiting to see what their strategies are going to be, and their annual report should actually give us a lot more of that data. But as I've told you before, negative results mainly coming from also African explosives. Sorry, we have to add that in there. African explosives, Standard Chartered, and Chilanga Cement. Those are the three who have given us negative results, while positive results in the earnings season have come from Airtel, Bata, CEC, Puma, Zambia Reinsurance. Zambia Breweries did have a negative read. And also ShopRite had positive results, but mainly you look at ShopRite as a dividend stock. Now, one conversation we wanted to have this today is regarding this new trend called the 4-day work week. I'm not sure where Vernon was. I would have loved to get his take on this, but unfortunately, I think we've lost him for the moment. But one conversation we are having is something called the 4-day work week. The world is trying to transition to this new phenomena of trying to shorten the weeks. Now, the history of time is that work weeks used to be 6 days. People used to work 6 days and rest 1 day. Why? Because the Bible said so. Okay, it says, and God rested on the seventh day. So you used to only be given 1 day of rest. So you'd work from Monday to Saturday effectively, and then take Sunday to go to church, rest, and then come back to work on Monday. They did obviously, under Henry Ford's time, that did start to come down, and it spread around the world. And now we have the 5-day work week. Now, the 5-day work week is has worked up to now, but it appears that the richer people have gotten and the more bougie people have gotten, now they want to work for 4 days, and they want to increase they do want to increase the hours. So in developed countries such as European nations like Germany, Denmark, Iceland, they're actually working with this. Australia is currently working on a pilot project for the 4-day work week, where they're picking some companies to do so. American tech companies are doing this, especially given work from home. And Japan is also trying to work on the 4-day work week. Now, on the 4-day work week, here's what they're discovering, they're looking at. There's some iterations where some workplaces are saying, instead of coming to work 5 days a week, working 8 days, perhaps you can come to work 4 days a week and work 3 days. And work 10 hours. So, in terms of working 5 days a week and working 8 hours, come to work for 4 days a week and work 10 hours. So some industries may accept that, some may not. Some it may not be possible, some it may. For example, shop workers are not going to come and do a 4-day work week, but they probably will do 4 shifts a week. Possibly that's what you'll probably find. So that you can make up the 40 hours a week, 160 hours a month. That is basically prescribed by the modern working cycle. So in the comments section, if anybody asked, I'd like to pick some of your brains here. What are your views? If you were given the option to work 4 days a week, but 10 hours as opposed to 8. So you come into work maybe at 7 and you leave at, I don't know, 6 p.m. It's like a 1-hour break at lunch, and you leave. You come into work at 7 and you only leave at 6 p.m. How many of you would be comfortable with that option, as opposed to the current setup of people get to work by 8 and you leave by 5? So maybe you extend it. You come in an hour early, leave an hour later, but you take Friday off. So the weekend will now be Friday, Saturday, Sunday, and your weekends will start on Thursday. How many people, if given the option and if it was optional, would you take that as the work option, or would you rather stick with 5 days, 8 hours? Now, that is a good conversation to have in the developed countries. I'm really stressing this point of the developed countries. You must be very, 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 very careful as to trying to implement this in developing countries. And Brennan, I think you're back now. It might be a good time to have this conversation. I don't know if you caught what we're talking about, the 4-day work week. What is your views
Yeah.
on being given the option to work? Because that's a big conversation to shift. Remember, we shifted from the 6-day to the 5-day work week. We've been working 5 days for 100 years now. Now we're talking about the 4-day work week, in terms of people now only reporting to work Monday to Thursday, but instead in some countries they're saying work 10 hours. So instead you're asked to come in an hour early and leave an hour late, and then you can take Friday off. So you make up those 8 hours by working 2 extra hours in the 4 hours. What are your take, Jordan? Would you take that deal?
Well, I think it depends with what you have on the table. Friday for some people feel like, well, my pay will be cut in a way. But for me, I think it's okay, because then it accords me a whole day during the course of a week to do other things. So for me, I think it's a win.
Okay. So what I'm saying is, if let's say you had it, because you're in the media space, it's very difficult to do that because we work in shifts in the media space. But if you, let's say, worked at a desk somewhere and you were asked, Vernon, would you rather work would you rather work 8 hours a day, Monday to Friday, or would you rather work? Now, I think where maybe the savings would be the convenience cost and the transportation costs. Maybe what if they no? Because the other question I think parents would ask is, will we have 4-day school weeks? Because some parents may be happy not having to take their kids to school, but some parents may be upset with the idea that, yeah, another day with these kids, yes. Some parents may take issue with you putting their kids on them for another day. Because the question is, will teachers work a 4-day work week? Because if teachers work a 4-day work week, now they're giving parents to have to not take care of their kids. And some parents use school as a daycare center. It's a place to drop off your kids so that you can go and do other things. What are your views, Vernon? I was saying, what's your view on that?
Sorry? Yeah,
Or have we lost
it's
you? Yeah.
for me. I think it'll be great. I've actually been in a what do you call it? Desk job, day job where you do 8 to 5 p.m. And I think the setting for me was almost like you just mentioned, an hour early, an hour late for work. So I think I was is where I would report an hour early, and everyone was like, "But why are you doing extra time?" I remember one time I was called by HR once, and I was told, "Who told you to be doing extra? We've noticed in the log sheet that you're coming in of the last people to leave the building, sometimes even more than an hour." For them, they felt as though they had to work around issues of extra time. But I was like, no, if I am able to put early and push in a few more hours, after actual knocking off time, I am okay with that. It's just been limited to this kind of thinking of literally 8. If you've seen at exactly 5 p.m., everyone, they were doing something important. They can finish that in the next 5 minutes or so. Everyone just drops everything and wants to leave. But for me, it is something
16:45.
I can actually
People are
do.
holding bags. Like we used to do in school, where just before knock-off time at school, your books are folded and you're ready. You're ready to hit straight out before the bell goes off. Here's my only concern about trying to install the 4-day work week in Zambia. And here's why I say that. The only concern I have, Vernon, in a 4-day work week is that Zambia is not fully employed. This is a good concept when laborers or workers have got negotiating power. This is why this conversation is working in those countries. Now, let me give you some statistics for 2021 and 2022 of the percentage of Zambians who are working formally, not working just in general. I'm talking about formal employment. The percentage of Zambians with formal employment in terms of the adult
Yeah.
population and also the labor force. We've had a decline in labor force participation, by the way, in Zambia. Youth labor force participation from 2012 all the way
Oh,
up
yeah.
to 2020, up to 2023, is down from 51.8% to 29.5%. Okay, 29.5%. Only 1 in 3 youth is actually working. Okay, and I'm talking, Vernon, about people from age 20 to 35, not 15 to 19, 20 to 35. Only 1 in 3 Zambian youth is working, okay, or is actually in the labor market looking for work. Now, what percentage of those people, of the Zambian youth population, currently has a job, a full time job? 10%. 1 in 10, Vernon. 1 in 10 Zambians who are between the age of 20 and 35 has got a full-time job. What negotiating power do you have, Vernon, to be asking for a 4-day work week? You will leave for that day and find yourself replaced. That's the danger that we're looking at here. We have too many people out of the labor force seeking work. 36% of Zambian youth in the labor force, because we've had a labor force drastically drop, are the ones who are in the formal sector. So only 1 in 3 Zambians who are actively in the labor force are formally employed. 1 in 4 Zambian adults between the age of 20 to 64 who are actively employed are in the labor force. So that is an important question I would like as many of you to start thinking about. Is before we start talking about a 4-day work week, Japan has a 3% unemployment rate. Germany has like a 3 to 4% unemployment rate. These ones, Denmark, they've got single-digit unemployment. And when they say unemployment, they mean percentage of people without a formal salary, Vernon. They're not counting somebody who moves a wheelbarrow on the streets and saying that's a job. They're talking about people who report to a workplace, receive a salary, and receive benefits and pay NAPSA. They get a formal amount every single month and they have a contract. That's what they count as labor in their country. They're not counting people who are selling on the streets. In Zambia, we count that. Okay? So when we're talking about the formal sector employment, where we're going to be talking about a 4-day work week, because you can't talk about a 4-day work week to a marketeer, Vernon. If they don't sell for 6 days, 7 days, they will starve. Okay, they don't have a salary. You have a salary. They don't. Okay, that's the reason why. That's the reason why they can't talk about a 4-day work week. So we have a huge informal sector already. 75% of your labor, 73% of your labor force is sitting in the informal sector, and about 64% of your youth labor force is sitting in the informal sector. While in those countries, 90% of their country is sitting in the formal sector. So that already tells you that you can't. That's a tough conversation to start having for here. So maybe the 4-day work week works there. Now, to try and have a 4-day work week here puts a lot of people's jobs at risk, because if the people who want to report for 5 days will replace the people who report for 4 days. Vernon, we've seen this, where somebody will pitch in and say, I would like to, somebody would say, we want a single job. We did this here at Money FM, where we announced a job for a presenter in 2019. We haven't done that since, because Vernon, the amount of people who came in and applied, 400 applicants were here. 400. Okay. 400. That just shows you that time when Golden Oaklet had jobs, thousands of Zambians converged on Golden Oaklet for 20 jobs, not even upper class, just people who were stocking shelves. Okay, when they had census jobs for people to start moving around with the census, tens of thousands of youth converged on that center trying to find a job. I don't think we can start having a 4-day work week conversation yet, because I'm actually seeing people asking questions about it. Should we have a 4-day work week? You will be jobless, people. Be very careful about this one. You can actually be jobless. So until May, we get the adult formalization rates up and the adult labor force participation rates up. Okay, until we get to maybe 90% of the labor force sitting in the formal sector, I don't think you should even be experimenting. Zambia is trying to move to the 24-hour economy. So my conclusion on the 4-day work week is this. It's for countries who are rich, where the labor force has negotiating power, not for countries who are poor, where the moment there's a job, it's like, have you ever seen an animal that's bleeding go into a river where piranhas come on it and they strip that thing clean? That's what a job opening looks like in Zambia. You can do a census in Zambia by offering a job. That's how tough the employment market is. Okay? Because everyone will come and apply for it. So I think that is the main concern I want to talk about when it comes to the 4-day work week. Quickly, Vernon, I'm gonna try. I would have done this in the quick shot, but to everybody, I know I did tell you that I want to give you a succession plan and I want to give you this, but I think time has not been our friend today. We will start with that tomorrow. Vernon, please be my reminder. I will start by giving people the 10 qualities of picking a number 2 and the 5 components and 5 principles of a succession plan for a business tomorrow in our Futuristic Friday Outlook for the entrepreneurs. But I don't think the employers, are probably listening to this today and looking at their workers say, try your 4-day work week. On that 5th day, you find your job gone. that's what your employer will tell you. Try your 4-day work week. On the 5th day, you'll find yourself out. No, we replaced you with somebody who's willing to work 5 days. Now go. now you can have a 0-day work week. And by the way, Vernon, my last concern, I think, with the 4-day work week is this. I think the developed nations are taking a risk. Why? If a company is okay with you working 4 days, do you know what that's telling me? They've automated your position. They've put technology and it's doing your work. And you're then going to have a 3-day work week, a 2-day work week, and an unemployment letter. That's what's going to happen very soon. They are going to have huge amounts of unemployment in these developed countries, because 4-day work week already signals to me that they're ushering you out. Because remember that they're working on trolleys where, their trolleys, is it Amazon has created that trolley where you can put your shopping stuff in there, you swipe your card on the trolley and you walk out with it. So no cashiers. Just think about all those cashier jobs. God, just think about that. All right. They'll tell you, no, you can have a 4-day work week. 2-day. No, I think we don't need you. Do you know that 40% of Amazon's labor force right now is robots versus only 5% of the manufacturing sector? 40% of Amazon's labor force right now is robots, not people. So already this is telling you where this is going. So you try your 4-day work week. It will turn into a lifetime vacation. That's what you're going to feel about. Try it and see what will happen to you. Anyway, Vernon, I'll leave that there.
I appreciate it. Thank Thank you. We will be with you tomorrow.
Cheers. I'll see you tomorrow. Have a good day.